Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 141, recorded here on November 10th, 2024. This podcast is for entertainment only and is not investing advice, so please do your own homework. All right, well, we got a lot of news to get through this week, so we'll jump right in with the market update. One of the most pivotal weeks of the year turned out to be records galore for Wall Street. The benchmark S&P 500 took its tally of all-time closing highs to a half century for 2024, while also smashing past the 6,000 point level in a historic first. As if that weren't enough, the index posted its best weekly advance in just over a year. Meanwhile, the venerable Dow Jones Industrial Average notched its 41st and 42nd record close of the year, while also taking out the 44,000 point level for the first time ever. The event of the week, and possibly of the year, was the culmination of the U.S. presidential election on Tuesday. By the early hours of Wednesday, former President Donald Trump, a Republican, had secured the 270 electoral votes needed to win against Democratic opponent Vice President Kamala Harris. The GOP also won the Senate, while the House remains undecided, though a red sweep seems most likely. The so-called Trump trade gripped markets, with the S&P 500 and the Dow on Wednesday eventually notching their best post-election intraday climbs ever. The latter blue chip index popped more than 1,500 points. On Thursday, the spotlight shifted to the penultimate Federal Reserve interest rate decision of the year. The central bank delivered a 25 basis point rate cut, as widely expected, following which Chair Jerome Powell said both the labor market and inflation were normalizing. For the week, the S&P 500 soared 4.7%, while the Nasdaq Composite jumped 5.7%. The Dow climbed 4.6%. All good news for stock market. Next up, looking ahead, the Trump trade will continue to grab much of the attention on Wall Street next week, following a momentous few days that saw Republican candidate and former President Donald Trump win the U.S. election against Vice President Kamala Harris. Though the final tally of votes is yet to arrive, a red sweep seems likely. Markets reacted with gusto to Trump's win, sending the benchmark up, as we discussed, 6,000 points, 44,000 for the Dow. With the bulk of the election now in the rear view, along with the Federal Reserve's latest quarter-point interest rate cut, the focus next week shifts to a packed economic calendar and the earnings season. Traders will receive October Consumer Price Index data on Wednesday, followed by the retail sales report for the same month on Friday. In terms of quarterly results, there are several high-profile names scheduled to announce their numbers, including Walt Disney, Cisco, Home Depot, Applied Materials, Shopify, and Spotify. Jumping into the Bitcoin news, this is from No BS Bitcoin, block 869727, important news of the week. Of course, top news, Donald J. Trump elected as 47th president of the United States. Bitcoin reaches new US dollar all-time high. He is set to begin his second term on January 20th, 2025. Bitcoin price surged to new all-time highs following the election results. OpenSats issued the eighth wave of Nostr grants. The latest grantees include Formster, Groups, Co-op, Nostrability, and the NIP44 libraries audit. Blockstream launches new research center in Lugano. The center will fast-track product development on the Liquid and Lightning networks by partnering with local innovators and startups. To fuel innovation, we're offering 10,000 Swiss franc sponsorships for promising projects, with selected teams invited to Lugano to collaborate directly with our team, added the firm. Disclosure of hindered block propagation due to stalling peers in Bitcoin Core version 25 and earlier. In versions before Bitcoin Core version 25.1, an attacker can cause a node to not download the latest block. The issue is of medium severity. The issue was reported and fixed by Greg Sanders, and mitigation was introduced in Bitcoin Core version 26 and backported to version 25.1. The Bitcoin Dev mailing list at lists.linuxfoundation.org is no more. The list moderator, Brian Bishop, said that the list, including archives, has been removed. Earlier this year, the list was migrated to Google Groups, prompted by the Linux Foundation's decision to stop hosting email lists as of the end of 2023. You can still discuss the archive, including Lightning Dev, using old URLs via a Bitcoin Dev mailing list archive link redirector at ganusha.org/URL. Strategic Bitcoin Reserve for the United States report. The Bitcoin Policy Institute published a 53-page report endorsing Strategic Bitcoin Reserve for the United States. It highlights a number of benefits of such policy, including economic and monetary stability, advantages in the geopolitical arena, support for energy and climate-friendly development, financial inclusion, and human rights. Have to check that out. Tornado Cash developer trial delayed until April. A New York judge ruled on Friday that the criminal trial for Tornado Cash developer Roman Storm, initially set to begin in December, has been postponed to April 14th, 2025. EU going dark. New surveillance package. Former Pirate Party MEP Patrick Breyer reports that the European Commission and the Council of the European Union are preparing a new, controversial, and non-transparent digital surveillance package. This plan reportedly includes reinstating and expanding the retention of citizens' communications data and proposals to weaken data encryption on all connected devices. The Commission is also preparing impact assessments and an implementation plan behind closed doors. The plan is still widely unknown among citizens, journalists, and politicians, even though we hold the documents in our hands, and the extent of the plans is frightening. A number of questions remain unanswered, writes the activist. Detroit to accept Bitcoin payments for taxes and fees. By mid-2025, Detroit will become the largest U.S. city to accept Bitcoin and other cryptocurrency payments. Residents will be able to pay taxes and fees via a platform managed by PayPal, according to an announcement by the local government. Currently, Colorado, Utah, and Louisiana accept Bitcoin for state tax payments, reports the block. Out with regulation by enforcement, in with regulation by the president. Lola L33TZ details why the forthcoming Trump administration may pursue regulated Bitcoin with the Bank Secrecy Act, AML and KYC, our favorite, and the International Emergency Economic Powers Act, sanctions, also our favorite, and also proven to work in all cases. IP spoofing attack targeting for Tor relay operators. Del Roth writes that malicious attackers are exploiting networks without BCP38 filtering by sending spoofed TCP requests. This causes the source IP to be blacklisted and possibly shut down due to abuse complaints. Deutsche Telekom launches Bitcoin mining pilot. Europe's leading telecommunications provider is launching a Bitcoin mining pilot called Digital Monetary Photosynthesis, developed by Deutsche Telekom subsidiary MMS in collaboration with Bankhaus Metzler. The project aims to provide data for stabilizing Germany's energy grids. Argentina's central bank hosts a live Bitcoin mining exhibit. The art installation titled Art, Artificial Intelligence and the Future of the Economy by Alberto Echegaray features a series of Bitcoin mining machines, spheres displaying Bitcoin prices, and a sphere filled with mangled fiat money. There's a picture of it here if you check out the link that I will put in the show notes. Pretty cool. CleanSpark completes acquisition of Grid Infrastructure, Inc. The acquisition will reportedly allow CleanSpark to build over 400 megawatts of capacity in the coming years. Moreover, this adds significant geographic and power supply diversity through expansion in the Tennessee Valley Authority service territory, providing us with additional operational flexibility, said CleanSpark CEO Zach Bradford. Applied Digital to raise $375 million via convertible notes. Bitcoin mining co-location firm announced a $375 million private offering of convertible notes, joining a growing list of miners making similar moves in recent months, including Core Scientific, Mara, Bitdeer, Hut 8, and TeraWulf. Certainly the market loves that stuff, and Michael Saylor's been shoveling that for a while now. So, Applied Digital to raise, sorry, I went through that. US spot Bitcoin ETFs now hold over 1 million BTC. Last week saw strong Bitcoin ETF inflows totaling 31,658 Bitcoin, primarily led by BlackRock's iShares Bitcoin Trust, or IBIT, ticker symbol. The total holdings purchased via spot Bitcoin ETFs are nearing 5% of the total Bitcoin supply. Seems like the higher the price of Bitcoin goes, the harder it is to meaningfully grow that percentage, but we shall see. U.S. Treasury sees stablecoin growth increasing demand for T-bills. The Treasury's report for the Treasury Borrowing Advisory Committee indicates that tokenization and stablecoins are emerging forces that could transform the Treasury market while also calling for more stringent regulations. The report estimates that $120 billion in stablecoin collateral has been invested in Treasuries to date. Tether registers $2.5 billion in net profit for Q3. Wow, not bad for a bank. One of the quarter's highlights is Tether's stablecoin issuing companies reaching a new all-time high of almost 120 billion USDT in circulation, the company said in its Q3 attestation report. Tether's 9-month profit this year is 7.7 billion. Yes, they're unregulated 100, in theory, at least according to their attestation report, 100% reserve bank, offshore, dollar-based in the internet. And they're more profitable than most of the big banks, which is crazy. That's probably not going to last. Semler Scientific adds 47 Bitcoin. Medical device company Semler Scientific disclosed additional Bitcoin purchases in its Q3 earnings report. The company now holds 1,058 Bitcoin purchased for approximately $71 million. So other companies getting into the MicroStrategy Act. First, UK pension funds invest directly in Bitcoin. British pension specialist Cartwright has guided the UK's first pension fund to invest in Bitcoin, allocating 3% of the unnamed fund's assets directly to Bitcoin instead of using a proxy like a spot ETF. Cartwright is also introducing a Bitcoin employee benefit scheme, allowing employers to pay Bitcoin directly into staff wallets. Gotta like that. Strive Enterprises to integrate Bitcoin into standard client portfolios. Strive Enterprises, a $1.7 billion asset management firm co-founded by former U.S. presidential candidate Vivek Ramaswamy, has announced the launch of a new wealth management unit that incorporates Bitcoin into client portfolios. I think we heard about that last week. Fold app introduced insured Bitcoin deposits. The new feature allows Fold users to deposit or receive Bitcoin directly into institution-grade custody, covered by $250 million deposit insurance as a result of the firm's partnership with BitGo. Block winds down TBD, scales back investments in TIDAL. We'll go into this one in a little bit more detail later, but the company is reducing its investment in TIDAL, the music streaming service, and is also closing TBD, its Bitcoin-focused division developing Web5. These changes allow Block to redirect resources towards Bitcoin mining and Bitkey, as stated in the Q3 shareholder letter. NYDIG reportedly acquired Consensus Technology Group. Bitcoin infrastructure and financial services firm NYDIG has acquired Bitcoin mining company Consensus Technology Group, reports Blockspace Media. The complete details of the acquisition are unclear, but CTG reportedly operates 120 megawatts with 5 exahash per second under management. OpNext Bitcoin Scaling Conference. The OpNext Bitcoin Scaling Conference took place in Boston yesterday. You can rewatch the event's talks here, and there's a link. Nairobi Bitcoin Lightning Developer Bootcamp 2.0 is set to take place on December 3rd through 6th, 2024. It is a 4-day deep dive into the Lightning Network development taking place in Kenya. Learn more and sign up here, and there is a link. Bitcoin Plus Plus Mempool Edition to take place on May 7th through 9th, 2025 in Austin, Texas. Ticket prices will increase on January 1st, and you can get yours here, and there is a link. Bitcoin Alive 2025 conference, Australia's premier Bitcoin-only conference, is set to take place in Sydney on March 8th, 2025. Tickets are available here, and there's also a link. And that wraps up Block 86977. Moving on to more news highlights. I'll try to skip through the shitcoinery and stuff that we've already heard about. This is the week in review from Bitcoin.com news. Donald Trump, we already heard about. JP Morgan CEO Jamie Dimon has warned that World War III may have begun, citing extraordinary, unprecedented risks. A consortium of crypto and fintech giants is launching the Global Dollar Network for seamless payments. Interesting. BRICS has invited 13 nations, or granted 13 nations, partner status, signaling ambitions for wider influence. Interesting. Dogecoin, don't care about that. All right. Moving on to the Hodler's Digest for November 3rd through 9th. This is from Cointelegraph.com. The world's largest asset manager, BlackRock, accumulated more than $1 billion of inflows to its Bitcoin exchange-traded fund across a record trading day as Bitcoin continued to break all-time highs. On November 7th, BlackRock's iShares Trust, IBIT, clocked 1.1 billion in inflows, reclaiming inflow status after 2 consecutive days of outflows totaling 113.3 million, according to Farside data. It came on a day when Bitcoin again hit all-time highs, reaching $76,943, according to CoinMarketCap data. IBIT's inflows represented almost 82% of inflows generated by the 11 United States listed spot Bitcoin ETFs on the day, which amounted to $1.34 billion in total. The Fidelity Wise Origin Bitcoin Fund saw the second highest inflows at 190.9 million, followed by the ARK 21 shares Bitcoin ETF with $17.6 million. The state of Michigan retirement system has added exposure to Ether exchange-traded funds, according to the United States Securities and Exchange Commission filing. In a November 4th SEC filing, Michigan State Pension Fund disclosed holding 460,000 shares of the Grayscale Ethereum Trust and 460,000 shares of the asset manager's Ethereum Mini Trust. The investment reporting for September 30th added to the fund's previously disclosed exposure to the ARK 21 shares Bitcoin ETF. At the time of publication, the total value of the Bitcoin investments was roughly $18 million. If Michigan maintained its holdings, the value of the 110,000 shares of the ARK 21 shares Bitcoin ETF held by the pension fund increased by roughly $1 million since being reported on June 30th. And the pension funds, like individuals, will have to learn about shitcoining. The State Bank of Pakistan announced a package of policy proposals on November 4th that, if accepted, would legalize digital assets such as cryptocurrencies as legal tender throughout the country. In a meeting chaired by SBP Governor Jamil Ahmad, the bank's Monetary Policy Committee reportedly submitted amendments to its standing policy that would allow state banks to issue digital currency. The proposed amendments would also impose penalties on digital currency issuers operating without approval. While the proposals would still require approval at the next stage of government, if they were to pass, it could pave the way for a central bank digital currency, ostensibly a government-issued digital rupee. And once again, Trump elected U.S. president for a second time. We already know that. In one of her first post-election messages, Wyoming Senator Cynthia Lummis reiterated plans for United States lawmakers to, quote, build a strategic Bitcoin reserve, presumably when Republicans take a majority control of the Senate in 2025. In a November 6th post on X, Senator Lummis said she intended to move forward with her plans to establish a Bitcoin reserve. The Wyoming Republican introduced the Bitcoin Act in July for the U.S. government to buy 1 million Bitcoin, roughly 5% of total supply, and hold it for at least 20 years. With Republicans expected to have a majority in the U.S. Senate after flipping 3 seats on Election Day, Lummis and her colleagues may have the votes needed to carry out the plan. Her proposed bill built upon an idea pitched by then presidential candidate Donald Trump, who suggested the U.S. government not sell any of its seized Bitcoin. Let's see. Top prediction of the week. Bitcoin reached an all-time high of 75,358 after rallying 7.23% in a single 4-hour candle. The bullish momentum accompanied the lead up to Donald Trump's United States presidential victory on November 5th. With the U.S. elections concluding with a pro-crypto president on deck, one crypto analyst reiterated Bitcoin price target above 100,000 in the coming weeks. A few hours after the U.S. election results, Titan of Crypto, a pseudonymous independent trader, highlighted a long-term cup and handle pattern for Bitcoin, which is currently undergoing a successful bullish breakout. A cup and handle pattern has a high success rate of 95% during bullish market conditions, and it can yield an average profit of 54% from the breakout range. In line with that, the trader mentioned that his incoming price target for Bitcoin is $110,000, a 47% return on investment of the current breakout price range of $75,000. In some FUD of the week, the CEO of Toronto crypto firm WonderFi Technologies was reportedly kidnapped and forced to pay $1 million ransom for his release, the Canadian Broadcasting Corporation reported on November 7th. Dean Skirka was allegedly forced into a vehicle in downtown Toronto during rush hour on November 6th. He made a $1 million electronic transfer to secure his release, a source close to the investigation told CBC. Skirka reportedly confirmed via email that he was involved in an incident on November 6th but is safe and that the company funds and data were not impacted. Police say the investigation is ongoing and have not released any further details, CBC said. More FUD. The California Department of Financial Protection and Innovation permanently, those seem like two completely opposite things, but anyway, permanently revoked the license of collapsed cryptocurrency lender BlockFi 2 years after its bankruptcy. Well, I guess it's better late than never. Announcing the news on November 7th, California's DFPI said that the license revocation came after an examination by the regulator following a suspension of BlockFi's license in November 2022. It only took them 2 years. BlockFi entered into a settlement agreeing to the license revocation and to desist and refrain from violations and cease unsafe practices, the DFPI said. After suspending BlockFi's license 2 years ago, the DFPI decided to completely revoke it after finding that the company had violated the California financing law. BlockFi violated the CFL by failing to consider borrowers' ability to repay their loans and charging borrowers interest before the loan proceeds were dispersed. The bankrupt crypto lending platform also failed to provide consumers with credit counseling and was unable to report payment performance to credit bureaus. Former Alameda Research CEO Caroline Ellison is expected to report to prison on November 7th to serve her 2-year sentence for her role in crimes at cryptocurrency exchange FTX. At the time of publication, the Federal Bureau of Prisons website stated Ellison was not in custody but provided an inmate number and her age, race, and sex. On September 24th, Judge Lewis Kaplan of the United States District Court for the Southern District of New York sentenced Ellison to 2 years in prison, where she's expected to surrender no earlier than November 7th. According to Judge Kaplan, the BOP ordered Ellison to appear at a correctional facility before 2 p.m. on November 7th. The former Alameda CEO is expected to surrender at a minimum security facility near Boston, suggesting that she could serve her time at the Federal Correctional Institution in Danbury, Connecticut, which houses both male and female inmates. Moving on, this from Crypto Potato, posted on November 9th. Jack Dorsey's blocked to focus more on Bitcoin mining instead of TIDAL investments. Jack Dorsey's payments and blockchain infrastructure company Block Inc. is shifting its focus to develop new tools for Bitcoin miners and enhance its self-custody crypto wallet. According to the latest shareholder letter, the firm plans to reduce its investment in TIDAL, Jay-Z's former music streaming platform, while also winding down TBD, its Bitcoin-focused unit that aims to create a decentralized internet known as Web 5. Interestingly, the announcement of Block's focus on Bitcoin mining came in the same week that Donald Trump won the U.S. presidential election, promising a more crypto-friendly environment in the world's largest economy. Trump had previously met with Bitcoin mining leaders at Mar-a-Lago in June, bringing together key players from companies such as Marathon Digital and Riot Platforms. During the closed-door meeting, the president-elect expressed support for Bitcoin mining in the U.S. and criticized the Joe Biden administration's position on cryptocurrency. Later, Trump reiterated his belief that Bitcoin should be mined in the U.S., claiming that it would help the country achieve energy dominance and urging a shift away from foreign mining operations. Meanwhile, Dorsey's shareholder letter noted, "Within our emerging initiatives, we are refining our investments based on our progress. We are scaling back our investment in TIDAL and winding down TBD. This gives us room to invest in our Bitcoin mining initiative, which has strong product market fit and a healthy pipeline of demand, and BitKey, our self-custody wallet for Bitcoin." Besides redirecting resources to focus on mining equipment development, Block also plans to allocate resources to BitKey, which happens to be the firm's self-custodial Bitcoin wallet, which was launched in December 2023. The cost-cutting efforts, on the other hand, come months after layoffs at the fintech firm. Moving on, this was posted on November 10th on bitcoinnews.com. Bitcoin Fog founder sentenced to over 12 years in prison. In a landmark case, Roman Sterlingov, the founder of Bitcoin Fog, a Bitcoin mixing service, has been sentenced to 12 and a half years in prison. The U.S. Department of Justice held that Sterlingov's platform laundered over $400 million in digital assets tied to illegal activities on the dark web. Judge Randolph Moss, who presided over the case in Washington, D.C., also ordered the forfeiture of hundreds of millions of dollars in Bitcoin-related assets. Bitcoin Fog operated as a digital currency mixer, blending multiple users' Bitcoin transactions to obscure their origins. Such services can make it difficult for investigators to trace digital assets, particularly those used in illegal transactions. Bitcoin Fog, which ran for nearly a decade, processed around 1.2 million Bitcoin, with much of it allegedly linked to darknet markets involved in selling drugs and other illicit goods. Sterlingov, a 36-year-old Russian-Swiss national, was convicted in March of multiple charges, including conspiracy to launder money and running an unregistered money transmitting service. Although prosecutors had requested a much harsher sentence of 30 years, Judge Moss imposed a lighter sentence. A life sentence seems inconsistent with the level of culpability, Judge Moss noted, but he added that the penalty needed to be harsh enough to deter others, especially in the world of digital assets where authorities have a hard time catching criminals. The United States Department of Justice released a statement on November 8th stating, "During the decade-long operation, Bitcoin Fog gained notoriety as a go-to money laundering service for criminals seeking to hide their illicit proceeds from law enforcement and process transactions involving over 1.2 million Bitcoin, valued at approximately $400 million at the time the transactions occurred." The statement claims that the bulk of the laundered Bitcoin came from darknet marketplaces and was tied to illegal narcotics, computer crimes, identity theft, and child sexual abuse material. It adds that the website operators were involved in a sophisticated business email compromise scheme targeting real estate transactions in the United States. Deputy Attorney General Lisa Monaco stated that the sentencing underscores the agency's commitment to targeting criminal networks that enable malicious individuals to thrive. She stated, Roman Sterlingov ran the longest-running Bitcoin money laundering service on the darknet, and today he paid the price. In the deepest corners of the internet, he provided a home for criminals of all stripes, from drug traffickers to identity thieves, to store hundreds of millions of dollars in illicit proceeds. Bitcoin Fog's case has become a symbol of law enforcement's crackdown on digital tools used for privacy. According to the U.S. Department of Justice, Sterlingov's platform allowed criminals to disguise the sources of their funds by blending them with other transactions. This service, the DOJ argued, was open for business to criminals looking to hide dirty money. The prosecution argued that Bitcoin Fog was a key player in enabling the movement of funds tied to illegal transactions across the internet, and they insisted that Sterlingov knew his service was primarily used by those with real problems with the law. Prosecutors pushed for a significant sentence, stressing that Sterlingov's actions were part of a criminal activity of a staggering scale over a prolonged period of time, in the words of Christopher Brown, a federal prosecutor in the case. The FBI, which worked on the investigation, echoed the DOJ's stance. Assistant Director David Sundberg said the FBI will not hesitate to use all tools at its disposal and will leverage our extensive partnerships to disrupt the cybercriminal ecosystem and the individuals who provide the key services that facilitate criminal activity. In court, Sterlingov denied operating Bitcoin Fog, claiming he was merely a user of the service rather than its mastermind. His defense attorney, Tor Eklund, argued that the prosecution had no eyewitnesses or solid evidence directly linking his client to the platform's operations. Eklund emphasized that there were no records that could place him at the helm of Bitcoin Fog, pointing out what he argued were gaps in the prosecution's case. Critics of the government's case included some privacy advocates who raised concerns about the methods used to link Sterlingov to Bitcoin Fog. Freelance journalist Lola L33TZ criticized the use of blockchain analysis tools such as those provided by Chainalysis, calling them potentially unreliable in cases with such high stakes. In her view, the government's crackdown on Bitcoin Fog reflected a broader war on financial privacy. And I kind of agree with that. Actually, I totally agree with that. Despite these arguments, the jury ultimately convicted Sterlingov, and Judge Moss ruled that the case had shown sufficient evidence of his involvement in the platform's operations. The sentencing in the Bitcoin Fog case has sent a powerful signal to the Bitcoin industry. Privacy-enhancing technologies such as mixers, often touted for their ability to protect user anonymity, are now under increasing scrutiny from regulators. Some see this case as an example of necessary enforcement action in an area where criminal activity can go undetected. Bitcoin podcaster Mario Nawfal commented on the sentence, saying, "This ain't just a slap on the wrist, it's a straight-up message to mixers. Play shady, pay heavy." For many in the Bitcoin industry, the Sterlingov case marks a shift. With law enforcement agencies ramping up their ability to track illicit activity, despite the anonymity provided by certain privacy tools. Still, some argue that mixers have legitimate uses. Privacy advocates note that they can protect individuals from tracking and surveillance, enabling financial privacy even in lawful transactions. For now, however, the Bitcoin Fog ruling suggests that regulatory bodies are focused on holding creators of such tools accountable if their services are used for illegal activities. Sterlingov's sentencing also draws attention to other platforms that offer similar services. Authorities are now investigating the other digital asset mixers such as Tornado Cash and examining the operations of privacy-focused wallets like Samurai Wallet. Roman Storm and Roman Semenov, the founders of Tornado Cash, and William Hill, the chief technology officer of Samurai Wallet, face increasing scrutiny. The DOJ has made clear that the Bitcoin Fog case is only the beginning of its effort to root out platforms facilitating illegal activity. The prosecution of Roman Sterlingov and his sentence imposed today should serve as a warning to cybercriminals, said the FBI's Sundberg, emphasizing that their efforts to track down cybercriminal networks will only grow. At the end of his trial, Sterlingov expressed remorse. "I'm sorry for any harm that may have come from my actions," he told Judge Moss, who acknowledged Sterlingov's statement, but stood by the need for a deterrent sentence. The Bitcoin Fog case leaves the Bitcoin community at a crossroads as privacy advocates, platform developers, and regulators continue to navigate the fine line between protecting privacy and preventing crime. For Sterlingov, the implications of his case are already real, but for the industry at large, his sentencing is both a lesson and a warning that as Bitcoin grows, so does the need for accountability. Yeah, well, or I would say the need for privacy. Need to figure that one out. Next up, so I don't really like talking about price action, and obviously this week was a great week in terms of price action for Bitcoin, and everybody's happy, and all the memes are flowing, and yada yada. But I thought I'd read two articles here, one negative and the other one positive, just to outline the point that Bitcoin's going to do what it's going to do, and don't get caught up in the price action. Stay humble, stack sats. Okay, so the first one is from Cointelegraph. This was posted today. Bitcoin ripe for major leg down as Bitcoin price nears 80,000, according to one trader. Okay, so this is the bear case. Data from Cointelegraph Markets Pro and TradingView shows Bitcoin gaining almost $2,000 in a single hourly candle on November 10th. Keeping in line with recent weekend price trends, bulls appear to be taking advantage of thin liquidity to drive the market higher, Cointelegraph reported. However, the Bitcoin US dollar up nearly 3% on a Sunday, some are already skeptical. Weekend moves and low liquidity almost always full retrace, by the way, popular commentator Whale Panda told followers on X. Keith Allen, co-founder of Trading Resource Material Indicators, reiterated the need for some pullbacks during Bitcoin price uptrends. Of course, weekends are for whale games, and we are in price discovery, so at this point, I'm more focused on weekly and monthly closes for Bitcoin, he wrote in part of his latest X post. Bitcoin is currently up nearly 15% this week, with Cointelegraph earlier reporting on 71,500 as the key line in the sand. Bulls need to spark a parabolic phase next. Analyzing order book activity, meanwhile, popular trader Skew explained the likely methodology of the large volume traders behind current price action. These entities drive the market lower with spoof ask liquidity only to have bids filled at an artificial local low later on as a result. Final part is they swap a percentage into price to create price momentum. This causes algos to bid as well, he summarized with the process then able to repeat. Would want to see new passive bids moved up soon to support price and increasing buying momentum in price. A further X post added with Skew asserting that 80K does seem to be the target. Also concerned about an imminent market U-turn is popular trader and analyst Credible Crypto. Already positioned for a significant Bitcoin price correction, Credible Crypto doubled down on that forecast over the weekend, giving a target of under $50,000. To be clear, what I'm trying to say is I think we are likely approaching our top on most alts, and therefore Bitcoin as well, sooner than expected, he stated. That dip, he added, would result in a major leg down. Okay. Next is from CoinDesk, and this was posted on November 9th. And this says why Bitcoin will soar above its fresh record, according to Van Straten. Bitcoin keeps hitting new highs, propelled above 77,000 on November 8th, for the first time ever by crypto industry optimism about Donald Trump winning the US presidential election. Other cryptocurrencies are soaring too. Ethereum's Ether, for instance, just surpassed $3,000 for the first time since August. What's intriguing is that instead of selling off, Bitcoin plowed through prior highs on November 6th, November 7th, and November 8th. Gold and US equities are doing the same thing, hitting highs and then breaking them. This illustrates how strong the current rally is and how likely it is to continue. The Bitcoin rally can keep going due to several factors. First, Google searchers' interest in the term is still relatively low. Searches were considerably higher in November 2021 and March 2024. So even though search interest has perked up in the past week, this suggests we are far away from market euphoria. CoinDesk has been monitoring profit taking over the past few weeks. Are investors cashing in as Bitcoin soars? They are. Glassnode data showed that on November 6th, the day after the US election, $3.5 billion of profit was realized as Bitcoin jumped from 68,000 to 76,000, while the total for the next 2 days was $3.2 billion. However, even though this may seem like a lot, it's tiny compared with prior all-time highs. In March, when Bitcoin finally rose above its 2021 record, profit-taking soared to $10 billion dollars. Throughout the 2021 bull run, it got as high as $6 billion dollars. It was even higher in 2017, sometimes around $4.6 billion dollars when Bitcoin records were around 20,000. Current profit-taking isn't even topping that, despite Bitcoin's price being far higher. Bitcoin has been stuck between 50 and 70,000 for 7 months. Despite breaking out of that range, investors are patiently waiting for higher prices. Using inflation from the US Bureau of Labor Statistics, you can measure how much purchasing power has been lost versus previous years. Bitcoin's November 2021 record of around $69,000 converts to about $78,000 in today's US dollars, barely above its current price. Investors may want more for their Bitcoin on an inflation-adjusted basis. So again, there's two sides to every coin on price prediction, and it's better to just stay humble and stack sats. Finally, wanted to highlight this week's featured post on Bitcoin Fortress Substack entitled Bitcoin versus Real Estate. It's kind of an update on something that I'd written a while back, comparing the two. I'll include a link in the show notes. And time for the weekly top boost on Fountain. Once again, at God's death with 536 sats. Thank you, sir. And with that, I'll thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. It's free. Although if you want to support me, there's also a paid, I think it's like $5 a month. And with that, oh, and don't forget, I'm also on Nostr, so follow me there. My MPub is in the show notes. And with that, I will talk to y'all next week. Bye-bye.